Alrighty, what's going on, everybody? Happy Tuesday afternoon. How's everybody doing? Let me know if you guys can hear me in the chat here real quick. And let's get started. Let me see. All good? Yeah, it's only temporary though. I'm going to go back. Honestly, I'll go back to 7 p.m. It just, this kind of works the best for me right now with volleyball season. So I'm going to, I'll go back probably once season ends, like November, I'll go back to 7 p.m. just because that'll definitely work a little better in my favor. So, but yeah, let's dive into it. Let's get into it. We've got not a whole lot fundamentally going on this week. Kind of talked about some of the positions I'm looking at. Hopefully everybody has digested what has come out of the Jackson Hole Symposium. And yeah, kind of go from there. We bear with me one second. Mm-hmm. All right, cool. Yeah, my daughter is playing tonight. I'm gonna go. She's actually up in college right now, but I'm going to watch it on TV tonight. So her game starts at 6:30. So my wife has told me I better be off by 6:30. So all is good. We'll get through it. Definitely, like always, if you guys have any questions, hit me up. Throw it in the chat, and we'll dive into it. So first things first, right? Fundamentally, we know last week coming out of a huge Jackson Hole Symposium of all central bankers. In a nutshell, right? I mean, the main stage event was Chairman Jerome Powell of the Federal Reserve. And I think, honestly, nothing has really changed. It's hawkish. And obviously, you can see that the dollar is continuing to drive higher. Euro USD is continuing to drive lower. Eventually, that's going to change. I would imagine that on the 20th of September, when we have our next FOMC meeting, I honestly think we are going to still get one more rate hike. And I feel like if we do not get a rate hike, I still think that they're going to leave it on the table, that there potentially is going to be another rate hike in the future. And that's what's going to keep the dollar very bullish. But ultimately, outside of the Fed, we do have the RBA. They came in last night and maintained their rates. I've got my eyes on for tomorrow. The Canadian USD CAD is going to be really something I'm going to be focused on to see whether or not they do stay at the 5%, which realistically, I mean, they were the first, BOC was the first to give the pause. I know inflation is still kind of persistent in Canada. And I mean, as much as I think they will either give a 25 basis point increase or stay the same, I don't think that's really going to influence too much. I think everything is really being driven by the dollar right now. You look at every market, no matter what it is, the dollar is just driving everything. So, we'll see what happens, but I'm going to be looking for some form of manipulation coming out of the Canadian news. And really on the dollar front, they're really the only things. I mean, ISM services, PMI, realistically, we're just going to see a little bit of movement on indices. Dollar's not going to be too much affected. We will see a little bit of movement on the unemployment claims. Obviously we saw, hopefully you've looked at the fundamentals behind the jobs report going up to 3.8%, specifically the unemployment claims, not the unemployment claims, the unemployment rate going up from 3.5 to 3.8. But if you listen to what Powell spoke about at Jackson Hole, anything sub 5% is still within their realm of acceptability. And the Fed is going to continue to maintain hawkish until the point where inflation gets down to 2%. So that's something I'm definitely going to be keeping my eye on. And then of course it's going to be Friday is jobs reports for the Canadian dollar. So not only are they looking at a rate hike on Wednesday, but they're also going to be looking at labor statistics. So that's ultimately why I'm going to be looking at USD CAD. But for the most part, nothing really changes. I've been talking about for the last couple of weeks, I am, odd and Kiwi pairs. I'm selling the crap out of them. If you've been selling them with me for the past, I don't know, at least the last 9 months, you've been making money off of them. I am still looking at potential shorts on Euro USD coming back into either dollar or euros points of interest. And ultimately, indices, all equities for me are looking for positions to go short on. So that's really my big areas I'm looking at. If you look at what's going on with UJ, and specifically Japanese futures, I'm kind of, I'm still puzzled. I don't know what they're doing. They're speaking restrictive, but they are not implementing the same monetary policy that you would assume would be possible. Yeah. So, I'm just going to kind of leave those on my secondary list. Until UJ, because UJ is kind of doing this, making higher highs and lower lows. Until UJ gives me the direction in which we're going, that's when I'll start looking at some yen crosses. But, for me, it's Australian and Kiwi pairs, just shorting the bejesus out of them. Looking at shorting Euro USD, and EG's come into the mix now. We confirmed the redistro today that I'm going to be looking for shorts on as well. So EG is going to be shorting as well. So really, that's kind of my main focus point. Was trying to get an entry in on Monday for odd pairs and didn't catch any. Yep, no, I haven't taken a trade yet this week. So the only thing I took this morning was a NASDAQ short, and ended up getting. I didn't take any partials out of it, ended up giving a really good reaction, but then ended up, stopping me out. So, ended up, not stopping me out, stopping my break even point. So, but I haven't taken any currency pairs yet this week. I was looking at hopefully getting some pullbacks on Euro and some Australian pairs, but we'll get into it. Yeah. All right. So cool. Let's dive into it. So realistically, again, we are in September. Traditionally, this is very, very low trading volume. Fiscal year's ending, banks are closing out books, and ultimately new portfolios are going to be handed out October 1. So I'm not going to be looking for big home run plays. I'm not looking for long-term holds. If anything, it's going to be short-lived, in and out. And that's really all I'm looking for. One of the things I definitely would recommend is pay attention to a couple things. Obviously, I've been talking about bonds for a while. Keep an eye on these, right? These are definitely what are driving the US dollar right now. I'd keep an eye on what's happening with the oil markets right now, specifically with some supply cuts that are happening. And obviously, we're getting demand that is going to be coming down as well, right? What's happening? Everybody's going back to school. The fall is starting. Vacations are done. So demand drops off. Supply is dropping off. So I am definitely going to become taking a look at some commodities in the near future. And then kind of going from there. So bear with me here. There we go. All right. So let's dive into the charts. Let's see. All right. So the almighty dollar, let's talk about the dollar first. So two areas that I'm definitely going to be looking for in the short term on the dollar are going to be whether or not we can come back into, there we go. So I'm going to be looking to see first and foremost if we can come back into Friday's price action from NFP. You can see my alert sitting right over here. And then ultimately, I'll be looking to see if we can come back into Wednesday's price action. This move is what ultimately took out weak-handed buyers. And this is what has driven the market in its new reaccumulation or newest market cycle. So ultimately, if we can get any kind of pullback this week, which, ultimately may not happen, right? We don't have a lot of news on the forefront to really shock the market. But if they can start to build something and get it down here, this is going to be where my best bet is going to kind of stand, is NFP price action. That reaccumulation sitting in there. And in Euro USD, that's going to be this right here, right? So I'm going to be ultimately very, very, very aggressive. If we can come into my entire move, this is the 50% and 50% of the NFP move lines up almost to the pipette. It's 2 pipette difference. So this is my X marks the spot. If we can get up here, great. We're talking roughly 130 pips, right? 130 pips is what I'm looking for as far as a pullback. I don't envision it happening tonight. This honestly may be a Thursday play for me. So I'd like to get up here Thursday. Thursday's always my biggest day in earnings. So, if I can get it up there Thursday, I'll be definitely looking to short it. What the heck? Hold on. Hold on. I don't know. All right. Sounds good. So EU for me is pretty simple. The only thing that'll get me to really look at shorting prior to getting up to here would be a very well drawn out redistribution. So maybe we spend, tomorrow going into Thursday accumulating, and then we redistribute. Then I'm going to play order flow out of the most recent redistro. But also keeping in mind that we have a little bit of divergence. We are in a very stout area of demand on the higher time frame for Euro USD. So, I'm not going to be. I'd really appreciate. This is what I want. This is really what's going to get this to the top of my priority list. Is us getting into here, or us getting into this move specifically somewhere between 0855 and like 0910. This is going to be the 2 areas I'm going to really be focused on. So I am looking at Euro USD coming out of there. Looking at Euro GBP now, I am looking to short this, right? I've been very bearish on Euro GBP for a while. Price just hasn't moved anywhere. We do have a confirmed redistribution, right? Overall, I do like the redistro that we've seen. We had the accumulation. We did have the mitigation of prior supply, followed by the shakeout here. And now ultimately, this is my leg, right? That's my leg. I'm going to play, and this is me playing, the order flow within order flow of order flow, right? I have no problem playing that. I am going to be hopefully looking for a potential short out of last night's redistribution. And, I don't want price to really accumulate in this area when we come down to a little lower time frame. I like the evidence of sellers in the market. I like the London manipulation sweeping out any weak-handed sellers. So I am going to be looking for us to sometime tonight come back up and mitigate out of this move. Whether we do it tonight or Thursday, I don't care. That's really where I want to see the play happen. And then targeting my first partials are going to be making this new low to confirm this right here as my next redistribution. So market cycle wise, I am looking to continue taking this lower. And I just need the pullback, right? I need price to give me a mitigation of the London move from last night, and then all is good with me. So EG is going to be pretty simple. I do like how EG is setting up and just, looking to continue shorting it. Continuing, I'm not too interested in GU. I'm going to use GU to my advantage, but I'd rather short EU than GU. So I'm going to use GU to try to position myself in EG with hopefully with a comparable strength analysis on GU and EU. I can really start to work something in on EG, but of course I just need to pull back on EG. So GU is not going to be on the top of my list. EU is, and then of course these Aussie and Kiwi pairs, right? I am looking at AU. I do like the AU short. Ideally what I want to come back into is Friday's NFP, right? I want to come back into Friday's NFP. We have a little bit of divergence here. NU is our laggard, giving us the manipulation to the upside. So we did break this morning, which is what I wanted. We have confirmed an overall redistribution here for another market cycle. So ideally, if we can get the 50% of the entire move as a pullback, that's going to be where I'm going to start looking. So neighborhood of like 64.40 is where I'm going to be starting to look for my next shorting opportunities on AU and just taking this down. Overall, my targets have always been to get down into the COVID low and there we go. Yep. So, once we break that low, that's my next target, and then getting down into here, right? I feel like we are going to continue just going lower with it, especially as the dollar continues to strengthen. Everything right now is being driven by the dollar. So AU, I'm going to be very aggressive in looking for shorts on AU. And NU as well, right? So NU, we do have the nice little redistribution. We do have really, really clean manipulation up here. So this is kind of my game plan. I'm going to be looking again, 59,300 is where my alert sits. In the redistribution here, where we have our Frankfurt manipulation, this is going to be my first point of interest where I'm going to be looking. I'm only going to be looking for price action to come in there. I'm not putting any limits. And at the higher end, 80% of the NFP manipulation, I will have a limit set there. This is what's maintaining my order flow leg on NU. I will be prepared though, if we do trade above here, right, the NFP move, 50% of NFP lines up with 80% of my entire redistribution. So again, X marks my spot. This for me is my high probability setup. If price can work itself back up there, this is where I'm going to be, attempting to get into price action. The limit order for me would be a 1 to 14. So that's perfectly fine with me. We just need price now to walk itself up at least, 60 to 70 pips, right? This is going to be really my very first area that I'm going to be looking at. So my alerts, 59,300 is where I'm going to have my alerts set. I'd really like to get up to at least 59.50. So it's not that far. We definitely saw the sell off on all dollar crosses yesterday and really overnight. So it just has to do with the bond markets. Eventually we are going to see some kind of reprieve, some kind of pullback, and that's ultimately what I'm looking for. So I like the effort that went in, right? I like the effort that they spent. They spent for the better part of almost 2 weeks, really, filling in and manipulating, coming in with some really good sell orders. So eventually we're going to have to come back into NFP and mitigate that. So AU, NU are high on my list, right? Higher. All the Aussie and Kiwi pairs are really top priority for me to continue shorting. On the ACAD and NCAD front, very similar price action, right? We do not have the confirmed redistribution quite yet, but what we do have is we do have a distribution that has occurred. We have mitigated prior supply and manipulation. I don't necessarily need to wait for this break right here. What I will wait for, hold on. There we go. What I will wait for though, is I will wait for either one of two things. You could see I'm either looking to play a redistribution here, or I want to see a distribution somewhere up in our last manipulation. So I need either a pullback or continuation move on ACAD shorts. All right. And that very much coincides with what NCAD is doing. And you could see where we are with NCAD. I really wanted us to short out of, I wanted us to break the low, short out of today, and then come back up to mitigate our NFP move here, right? So Friday's NFP move across the board is really where the big manipulation occurred. This is where I want to start looking for continuation and mitigation plays. All right. So I'm not too happy that we did not break. We came within, came within 5 pips. So this right now, looking at NCAD, how we finished today, is not giving me really a lot of high probability in wanting to short out of up here yet. So maybe tonight we'll sell off, make the low, and then this will kind of bring back up into my priority. But right now, like on a risk assessment, ACAT and NCAT are definitely way below AU and NU. I prefer the AU and NU price action way better. All right. So this is ACAT, NCAD, and then finishing off the Aussie and Kiwi pairs that I'm really looking at are Odd Chef and NChef. So, we ended up, for the most part, we ended up playing just a little bit of a manipulation play coming out of NFP. It could be mitigation of previous essentially the real market cycle. And what I want to see is us again, common theme on all of these Aussie and Kiwi pairs is NFP mitigation, right? So I'd like to see if we can do that. If not, then for me, it is going to be continuation play to the downside. All right. That's really how I'm going to position myself into these. If you look at NChef, very much same thing, right? NChef did not break last week's low like NCAD didn't either. So this is kind of turning me off the fact that we came right to it and never broke. So I'm really not interested in playing the aggressive move. I 100% have full confidence that at some point we will be below this low. We will have this as a redistro. But right now I don't know where they're going to sell off from. So ideally, perfect world is we get a little more weakness coming in, and then I have, then I know what's controlling what. But for right now, Odd Chef, NChef, Odd Cat, and NCAT are kind of just going to be on hold until I get confirmation on AU and NU. So those are ultimately the Australian and Kiwi pairs I'm looking at. So UCAD's another one that I'm looking at. And what I am going to be, hopefully the expectation is, especially after we have confirmed reaccumulation, the expectation is that I want to see at least 50% of the entire reaccumulation, but I'd really like to get back into this accumulation down here. So I'm hoping for 135.20 level to come back down. That's going to be roughly 110 pips from where we're at now. If we can get that with tomorrow's news, right, get some selling pressure to come in for tomorrow. And then this is where I want to start looking for my buys on UCAD. Ultimately, especially with bullish dollar, right? If we continue bullish dollar, bonds continue to go bullish, I feel like we're going to get the opportunity on UCAD for the buy to take this higher. So UCAD is a buy that I'm looking at. Like I said, I'm looking to short EU, shorting the Aussie and Kiwi pairs. And of course, UJ is one that I'm looking at. And UJ is the one that I'm kind of just sitting back and waiting on. We have made higher highs. We've made lower lows. We are in an area of supply. The BOJ has touted that they are ultimately, very restrictive. However, their monetary policy that they're doing is easing, not restrictive. So, if like the emoji of throwing your hands up, that's where I'm at with the Bank of Japan. So, and the market is kind of very similar to that, because you could see that when you look at this right here, who's in control of this? Is it buyers or sellers? And until we broke the high, I was pretty sure that this was at least going to go a little lower down. And after a quick manipulation, sweep of some lows, and then break the high, now we've confirmed ultimately some kind of reaccumulation. Whether or not this turns into a larger distribution, I don't know. The fundamentals are very, very vague coming out of the BOJ. So, you can see that UJ is on my primary list just so that I can watch it. But I am not really, what the heck? Hold on. Let's see. Got a little storm coming our way. Tropical storm Lee. Wonderful. All right. Well, it is what it is. Okay, cool. Hold on. All right, cool. Sorry, I was messaging my daughter back here. Okay. So UJ, it's one of those where I'm just going to kind of let it do its thing, and eventually I'll have an idea of what I want to do with it. So that's what I've got for currencies. And then I'll kind of talk about some indices, right? I'm looking to short them short term, just playing like the intraday moves. But when it comes to currencies, this is really all I'm really focused on. I'm not too interested in anything else. I have looked at CAD Chef. I was looking at it earlier this afternoon. And realistically, for me on CAD Chef, we don't have anything really that I'm interested in. We've broken the low. Hold on, let's get out to, here we go. So we've broken the low, and at this point, I mean, this is what we've got on the daily. If price accumulates here and gets back up here, well, great, but that's 200 plus pips. I'm not interested in playing, this small little order flow going on over here. I'd rather just wait to see if this accumulation, so this accumulation, 1 drive, 2 drive, 3 drive, if this accumulation walks itself back up into, potentially something here, this type 1 that's up here or something, and then that's when I'll move this over. But CAD Chef hasn't moved. I mean, if you look at this, we've been we have been in for almost 2 solid months. It's been in a 158 pip range. That's it. And even more so when you look at this right here, the last 30 days, it's been in a 50 pip range. So nothing I really want to get me wowed on CAD Chef. So currency wise, that's what I'm looking at. On the indices side, like I said, I'm looking for shorting opportunities. All right, here we go. So shorting opportunities, this is kind of what my thought process was today. I was hopefully looking for shorts out of here. Never got it. I did not look. Hold on, let's just see. Yeah, there was nothing really at power hour either. So U30 never really gave me an entry to really play out of. There was a very, 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 very small micro to play out of here after, but we never even broke this. So I wasn't too aggressive in trying to play this. This is still something I'll play on the table. If we can get some kind of pullback back into at least, coming back into here, that's something I'll be interested in. On SPX, you can look at this garbage that we've got going on right now. We did absolutely nothing today, right? Absolutely nothing today. What I was hoping for was, obviously I had a limit order out of the micro that happened here on Friday. And what I'm going to be looking is, do we now accumulate here, come back up into, maybe this small little micro that occurred here, or do we come here? If we don't, right, if we don't get these pullbacks, then what do I need? Well, I need at least some kind of sweep, right? I'd like to see some sweeps of some highs, right? Manipulation, get the break and do something like this. All right. That's what gets me into it, right? But we have zero manipulation whatsoever in this. There wasn't really anything I wanted to play coming out of this distribution, because this distribution didn't even sweep out any liquidity here. So, and then when we failed to break the low, really, I couldn't even play this as a redistro. So, was looking at NASDAQ, but some news came out for Tesla and sent it up. Yep. Yeah, I'm still looking to short it, bro, as well. Yep. Yeah. So I do like, let's see, I didn't look at it. Where are we at? Where are we? I mean, so what happened? What do we know? We know we distributed. So here's our UTAD, and we know that we came back to mitigate it. And we also took out the opening high, that little micro distro. So I would say that going into tomorrow, if we don't get any real movement, I'm gonna be interested in the redistribution that causes the break. So, realistically, I'd probably set my alert around 45.05 and just wait for the open to give me, like you could see this really clean distribution. If I get a distribution there, I would say that I'm going to play it. I mean, it's a pretty clean distribution. So it is a pretty clean distribution. Especially, it would have been a little better if this would have swept the high and then this mitigated it. But it comes into the 50. There's the open. So this was the entry right here. You've got open, sweeps out, and then you get the break, and then you get the mitigation. So, it was there. And that's probably where I'm going to be looking for going into tomorrow morning. So equities open. That's something I'll definitely have my eye on. I'm only looking for shorts. I'm not trying to buy indices. For me, the selling is way. Just look how effortlessly the sells are just shorting off. Like you catch the short, you just ride the wave. The buy, it's so much more. There's so much more effort that needs to go into it. What do you expect will be the major target for US 30 this month? No clue, bro. This month, no clue. To 32,000 level. To 32,000 level. Yeah, I think it'll come lower than that, bro. Yeah, I would say I'm still looking. I still think we're going to come below here. I still think that's going to happen. The key things are going to be inflation's going to be what is going to drive this lower. So, this all here is everything that's happened in here is really just going to be, hold on one sec, stupid dogs. All of this is potentially just setting itself up for the Fed to continue just hammering down on the economy. Remember, contraction is what the Fed is trying to get, contraction in the US economy to take this lever. So if that happens, great. But yeah, I think we're going to go lower, at least for the foreseeable future, for at least to the end of the year. I don't think we're going to see real tremendous bullish movement in the economy like we saw from years ago, until inflation gets back down to 2%. Do you think it can come higher to get liquidity? You could see where I have an alert. I have an alert up here. So could we come back up into here? We can. The question is, what's going to be the catalyst to get it up there? So I feel like they're definitely working something here, whether or not they sweep out, or whether they just can collapse it. I honestly don't think you're going to see, well, at least this week, you're not going to see true manipulation. Maybe, ask me on the 19th of September, and I'll tell you where they're going to sweep out, because the 20th is going to be FOMC, and that's going to be where significant manipulation is going to occur. Yeah. Yeah. So on NASDAQ though, let's see. On NASDAQ. So yeah, so this is where I got in. I got in off the 80 here. As soon as I saw the movement, it shot down. I did not want it to come back up, so I just broke it even, and hopefully it went down, but she did not. She did not. So I am still, I'll tell you right now, I'm still favoring this distro up here. Yeah, this distro up here looks pretty good. I want to short NAS from higher unemployment claims could give us no, I don't think so, man. Yeah, I mean they've been within a couple thousand on unemployment for forecasting it. And if you look back at all the previous, look back at the last 3 months of unemployment, I mean, you're seeing on NASDAQ, I think unemployment manipulation gave something like 30 points. So yeah, I'm not for me, it's going to be, it's going to be, do we now come back, and is this the start of the next distro that comes into, maybe, 15,600? That's where I'm going to be waiting. If we don't get up here, right? If we don't get up here, then for me, it's going to be, where's our next manipulation? So if you look, I mean, just pay attention. I mean, there's a reason I have like sessions that are colored out. If you just look, New York always does a really nice manipulation, and then, we get some kind of catalyst to ultimately continue the trend in the direction that it needs to go. So, I'm going to be looking tomorrow morning. I'm honestly, I'm hoping that we just do this tonight. I'm hoping that we do this tonight. Maybe we get, London to sweep out these highs, and then, come equities open, we're here tomorrow. That would be ideal for me, and then I'd be looking to just short those off, right? That's going to be kind of my game plan. All right, cool. But yeah, that's going to be what I'm going to be looking for. But only shorts on indices for at least the foreseeable future. I'm still very bullish. Dollar is, in my opinion, dollar is continuing to drive the market, and until we get to the point where the Fed is highly anticipating a pause going into a rate reduction, we're not going to see bonds pull up. Bond yields are continuing to skyrocket. And, as long as bonds continue going higher, dollar index is going to follow. And when you look at, when you follow the volume is, it makes sense. I mean, it's a no brainer. Why try to ultimately go for the big long shots and, maybe capture a 12, 13, 14% yield on it when you can go into treasury bonds and lock in at, ridiculous 5% almost. So, but yeah, that's kind of my game plan. So yeah, going for this week, I'm only looking shorts on indices, and it's going to be, I mean, just look back at the last couple of weeks on indices, especially the ones that gave decent sell-offs. You had your distro going into the open. So that's kind of where I'm going to be looking at it. One more thing. Go ahead, bro. What do you got? If you have anything now's the time to ask. Definitely ask. If you got charts, let me know what you said you're waiting for sells. If we look at US 30, it broke structure on the 4-hour and the daily. It broke structure on the 4-hour and the daily. What's the difference between the 4-hour and the daily? It broke structure on the 4-hour and the daily. Let's see. So where's your market cycle being held from? For me, this is just order flow. This is just order flow. And ultimately you're being held by this distribution up here. So these highs mean nothing to me. Yeah, absolutely nothing to me. So when you look at if you're going straight technical on indices right now, I would definitely caution you, because there is definitely a lot of, and you can see it. Look at the price action here, and then look at what we've done for all of 2023. Just look at the indecision and look at the just look at the candles. Look at the candles on this 3-day, and look at the candles on what we did, all of 2021 and 2022. For me, fundamentals are definitely going to come into play here. And I mean, whether or not we can get down below here, I would imagine that they're going to try and push it down lower than that to come back and mitigate COVID. But they might not need to. So, but at the very minimum, I 100% feel we're going to take that low right there. We'll see a sub 31,600 Dow Jones. It didn't respect structure for the rally up 5 months ago. No, there's no right now on indices. There's absolutely zero structure. I would say just follow your market cycle, and I would say, follow what the Fed is doing. Right now, you've got, in this time period right here, you've got the largest rate hikes ever in the history of the Federal Reserve, and look at what the market did. But then you look at ultimately the manipulations that kind of went into it. Look at the individual stocks and how they were kind of, I wouldn't say how they were gaslighted into it, but yeah, I would be very cautious of trying to buy indices right now. So what's my favorite prop firm right now? My personal account. Yeah, I mean, if you're a US resident, I would just be I wouldn't say cautious, because prop firms are prop firms, right? I mean, you got to use them. You know what I mean? Use and abuse them. I would say this: when it comes to the prop firm saga, I think this is very, very positive for traders. I am, I've been saying it for years that some of these prop firms are, all they are just Ponzi schemes. For those of you that don't know this, you can open up your own prop firm with as little as $2,000. That's all it takes, because I've been approached by several companies to, start up my own prop firm. And honestly, it's not worth it. To me, it's not a investment opportunity that I want to do. So yeah, it's great. I hope the regulation comes. There is, in my opinion, there is no prop firm that is going to be immune from regulation. The only way that they're going to immune themselves is they don't offer, in the case of like Canadian and US citizens, they can't offer it to US and Canadian citizens. Okay. Well, if you look at some of these prop firms, take for instance, shoot, what was the one I just saw? FTMO US residents are the second. Actually, I think they just moved to first. But when it comes to payouts, US residents get the most payouts out of FTMO out of any nation. So yeah, I'm for the regulation. I think this needs to happen. It should have happened years ago. My biggest complaint, and if you read the MFF complaint by the U.S. attorney, some of the crap, some of the actual evidence that they have, correspondence in email from, high-ranking members of MFF to their broker, essentially telling them, that they can't afford to be paying out $100,000 payouts. So please, move this account to this profile so that it can, incur more slippage, and it can do this and can do that. That's just straight up shenanigans. So my biggest complaint when TPT was around, my biggest complaint from TPT was that my orders were never getting filled. I would put in, On EU, I would put spreads of like 6 pipettes and I still wouldn't get filled. And I mean, this is why, because they, a prop firm does not want to pay you out. They lose money when they pay you out. They make money by selling you a challenge, right? That's how they make money. And in the small chance that they can move you over to an A book, because when they start, every prop firm starts out on B books. Then they have like a hybrid plan where they can move you, individual accounts over to A books, but they have to purchase those accounts, right? They have to purchase that liquidity from their broker. So if you're buying a 200K account for $1,000 from a prop firm, right? They're probably only paying $100 to $150 for it. So they're making $850 to $900 off of your transaction. When they have to pay you out, they're dipping that out of challenge fees. When they want to move you over to the A book side so they can make money off of that, they now have to buy your 200K account that you paid $1,000 for. They have to buy that for $800 or $900 from their broker, from their liquidity provider. And then they only get a small percentage of that, right? They only get, sometimes on some, some offers that I've received, they only get 20 to 25% of your cut. So most prop firms, man, they're all about not wanting to pay you out. That's why for me, the quickest thing I can do is get risk free, get my initial challenge back and get, whatever payouts I can and move on. Did yeah, bro, TPT failed. Yeah. TPT, what was it? 2 years ago or something like that. The Australian Commission shut them down. So, but it was hush hush, Yep. I had an MFF account. Yep. I had an MFF account. My brother had actually my brother got an email from them to request his payout and he requested it, but there's no way they're not paying it out. Their assets are all seized. It's not a matter of if they can pay people out, it's a matter of everything is seized. There's court orders seizing it. So yeah. Yeah. But again, I mean, for me, prop firms are just what I use as another supplemental income, right? My main accounts are what what I'm living off of. My prop firms are, when I get payouts from prop firms, I dumped, I would probably say I dumped a good chunk of that, money into my separate accounts so I can manually trade them, without any kind of rules or, without any kind of setbacks, because it's frustrating when these firms are giving all kinds of shenanigans, man. They're upping the swaps, they're not filling orders, they're not paying you out because they're giving you some BS reason. The one that really got me was, everybody knows I use the position size calculator from off of Forex funds, or not Forex funds, Earn Forex. I've been using that for years. It's an EA. It used to be just a script, but it's an EA. And one of the prop firms I traded on flagged it as a unauthorized EA. And I was like, what are you talking about? It's a position size. And I even showed them what it is. I freaking screenshots, sent them the link to the download that they can download. And again, that's what happens. I had what was it? It was a 100K account that I had a $7,200 payout. And they just didn't want to pay me the $7,200. They had already paid me 3 different payouts. And, up in the prop firm realm, they don't want to pay you out multiple payouts, right? They want to force you to buy more challenges so more money comes in. So, let's see. If you're not using prop firms, what's your broker? So I use a couple of different brokers, man. I do. So it depends, right? So my main broker, my main account, my largest account is with Awanda, and I wouldn't recommend it to anybody unless you're looking to put, at minimum 6 figures to 7 figures in an account. Because Awanda, now for US residents, Awanda, you have to do first in, first out. So it really does suck. And your leverage is garbage. It's 1 to 50. There's a lot of rules for US residents. If you're not a US resident, I definitely would look at Awanda. Again, their leverage isn't the greatest, but they have 100% security. They're backed, by a capital group. especially as a US resident, it's FDIC insured. So I have multiple, especially with the whole collapse of the banks. FDIC insurance used to be maxed at 250, and now it's kind of like a blank check. So I have no issues keeping my money in Awanda. However, the spreads suck. You can't trade anything but majors because the spreads are horrible. But security goes a long way. Outside of Awanda, I use FX Choice, right? I use FX Choice for just indices and metals. I haven't traded gold or silver in a long time, but I use them for metals. I'm sorry, for indices, because you don't pay commission when you trade SPX, NASDAQ, or US 30. And I'll tell you right now, if you add up all the commission that you've missed out on, it's, especially on a mid-size account, it's thousands of dollars. So I do like FX Choice. They're regulated. They are, well, shoot, here, I'll just do this, bro. Hold on. It's just on my website. So I have FX Choice. Here we go. I have FX Choice as my for indices, and then Osprey and Henko are the two larger ones that I use right now. So I'll tell you right now, Henko for me, Henko Trade has the lowest commissions and spreads out of any broker that I have. They've been around for a very, very long time. So Henko Trade's one that I really like, and then Osprey's the other. So I kind of use them both. I have pretty decent size accounts in both of them. Never had issues. I can tell you with Osprey, I requested a couple $1,000 payout not too long ago, a couple $1,000 payout, and I received it. I received approval and the money within, I would say, 12 hours. So they were very quick. And Henko's pretty much, it depends with Henko. If you request it on a Friday, you're probably not going to get it till Sunday. But I've requested payouts on like Tuesday and received it, like Wednesday morning. It was in my accounts. So I do like Osprey. I do like Henko. I do like FX Choice. So those are the big ones I like. Hold on, let me catch up, bro. For someone looking to buy a prop firm right now, considering the situation, dude, honestly, I mean, I would say the safest out of all of them is probably going to be FTMO, man. But even them, I think FTMO might be the next one that, CFTC goes after. So just because they're the largest prop firm there is. But like I said, I mean, get in and get out, get your, so at least with like, with some of these prop firms that end up having issues, at least I can say that I didn't lose any money. I got my challenge fee back. I got a couple of payouts, and then, that's where issues start to arise. So, but yeah, those are the main brokers I use. Like I said, FX Choice is just for indices. And then I use Henko and Osprey, for my day-to-day trading, and Awanda is what I use for my big account. And really, I'm only trading, like I said, on Awanda, I'm only trading majors. I'm really only trading EU, like AU. Sometimes I can't even trade NU because of the margin requirement, but Henko and Osprey are the big ones that I trade on. What's the best for non-US besides Awanda? What's the best for non-US? Well, like I said, I mean, it's up to you. FX Choice is regulated. FX Choice is a regulated broker. So, I've got a pretty good size account with them, and I've never had issues. Their chat is always open 24/7. I've been with FX Choice, man, for a long time. I think I've been with FX Choice since 2009. So yeah, I mean, I've been with FX Choice for a long time. Henko I've been with for a little over a year, and so is Osprey. But like I said, Henko, if you open up an ECN Plus account, which is a minimum of $1,000, you get the lowest spread. So on EU, I think it's like $2.50 per lot, which is ridiculous. And EU has 0 to 0.1 pipette spread. So yeah, definitely give them a look. Have I heard about icy markets? I mean, I've heard of icy markets. I've never been able to trade with icy markets because I was a US resident, and I stopped even looking at IC markets because when they got rid of their they're no longer regulated. At least they weren't 2 years ago. They stopped being regulated. So, what brokerage am I using? Yeah, there you go. So, and then for futures, so I trade futures contracts as well. I use TD Ameritrade. For someone looking to buy a prop firm right now, considering, I hope I answered the same question, bro. Yeah, and there you go. Considering TFT is US based and people are saying avoid US and Canada based prop firms and true Forex funds is red labeled by CFTC. Yeah, but it doesn't matter. So even like what makes, so I guess the question is what makes it US based? So just because they have an address in the US doesn't make it US based or Canadian based, right? That's not what, you know, because if you look at TFT's LLC is not in the US, right? It's in one of the Caribbean islands. Their liquidity provider is in the Caribbean islands, right? That's not what makes it under the jurisdiction of the United States. If your prop firm offers services to one U.S. resident, one U.S. client, you have just allowed yourself to fall under U.S. jurisdiction. So, yeah, I mean, and I don't think there's any prop firms out there that, well, maybe there's a couple, I don't know, but I don't know of any prop firms that don't offer to U.S. residents. So, A book is when brokerages take the same trade as you. No, A book is when the brokerage assumes your risk. So, and what they'll do is they'll take essentially what they're going to do is they're going to take a percentage from your trade. I mean, they're still going to pay you out, but it minimizes how much they are essentially risking out, you know? So like on a B book, if you break it down like this, right? So you have B book over here and you have A book over here. B book, it's all fantasy money, right? It's demo accounts. All right. There is no live market. On the A book side, your account is actually on a live liquidity market, right? So this is the firm's responsibility is your account, right? If you screw it up, they eat it. Where on the B book side, man, they don't care what you do. The only thing that matters is at the end of the 30 days, 14 days, whatever, when you request a payout, they got to figure out where they're going to pull those funds from. So that's it. Yeah, that's all that matters. So can they take the same trade as you? They can. Sure. Yeah, they can. But just because they're taking the same trade as you doesn't mean they're on the A book. Do you think prop firms that trade futures are afforded an extra layer of protection like Top Step or Apex? What do you mean afforded an extra layer of protection? Thoughts on UCAT if it goes lower than your POI? So you mean if it confirms distribution, then I'm probably not going to do anything with it. Yeah. Because if it goes lower than the reaccumulation, then we're in a larger distro. Why don't you use TD Ameritrade for Forex? Because it doesn't, have you ever used TD Ameritrade for Forex? No, just options. Yeah. So it falls under the first in, first out. So if you get into, if this is the 50 and the 80, right? And you get into this 50 entry and this 80 entry, and then it redistributes. And now you want to get into this 50 and 80 entry, which I typically do. I've got to close this order first, then this order before I can close this order and this order. And sometimes I don't want to do it. Plus, you only get on TD Ameritrade, you only get, I think, 1 to 30 leverage on Forex. So I only just trade contracts, and typically I only trade contracts on ES Mini, which is the S&P. I don't trade the Dow that often. It's NASDAQ or the S&P, just because of what it costs me. How does a prop firm work? Do they make money with their 20% profit share? No, they don't make any of that, bro. No, if you make $1,000 and it's an 80-20 split, they got to come up. They got to figure out how to pay you $800. The $200 is just what that's a way to say that they're good. Just kind of cut your fee off. It's like some of these firms that have consistency rules. All they're doing is trying to figure out a way to not pay you full amount. Yeah, that's all it is. That's why realistically, the goal is always to build your own account, right? Use a prop firm. Think about it. Let's say you're paying $500 for a 100K account, right? You paid $500 and let's say it takes you, 3 weeks to pass the challenge, another 3 weeks to pass the verification. So you're at 6 weeks, right? So now in your, let's say, you're going to be at 10 weeks because now you're going to trade for 4 weeks. And let's say you made $2,500 as your profit split, right? Okay, so you're up 2K. Take that 2K, drop 1,500 into your account, right? Into your firm, whatever your Forex account, whatever it is. Take that $500 out of that 2K, and now buy another challenge, and you just repeat this step. That's all it is. I have one of my accounts, my Osprey account, right? I started that sucker with, man, I don't even know what the hell it was. I think I started that account with just under, I think it was like $2,500 is what I put into it, right? Because I was testing them out. And this is the model I've done over the past like 9 months is I take my profit split, dump it into there. Take my profit split, dump it into there. So that account right now is getting up close to like 20. Actually, I've 10x'd it because it's just over 25K. And that's me just taking money out of my profit splits, and I haven't added any more money to it. It's just trades and dumping in equity from profit splits on prop firms. So I mean, this is the goal, right? Because when you're sitting here, whether it's a 25K account, a 100K account, right, a 500K account, bro, you do whatever the hell you want with it. Now obviously you want to trade with a firm that you have some reliability with. That's why, like I said, I mean, Hanko isn't regulated, but they've been around since like, I think I want to say like almost 10 years they've been around. They've got a proven track record. They keep, they're pretty transparent with how they keep their funds. So, I noticed your AU trade was also monitoring this setup. My question is, why do you use a sell stop? And why didn't you wait? Why did I use a sell stop? Why did I use a sell stop? So who wants to answer that? Why have I? Well, I guess if this is your first time on, bro, you don't know, but one of the guys in my group asked a question at the beginning of the year because we kept missing trades because price wasn't mitigating. So we figured out what's the easiest way to make sure we're in the trade and then minimize our exposure and risk. Sell stops and buy stops. So that's why we do it, man. Yep. Because it don't come often. Yep. If there's a phrase that I'm going to coin in 2023 it's she don't come back. She don't come back. So yeah, buy stops and sell stops is definitely going to be one of the main reasons for the amount of profitability I had this year. So that's why. Yep. Let's put that on it. Yeah. Yep. So, but yeah, when it comes to brokerages and firms, man, that's what it is. I mean, like I said, I've been with FX Choice the longest out of any firm. So I've had them for a very, very long time. So since CFDs are technically illegal in the US, futures are inherently more regulated. Yeah. But so like I said, what is the extra layer of protection that you're looking for? Yeah, a U.S. resident technically cannot trade a CFD through a broker. It has to be an offshore broker. So, like a Wanda offers CFDs, but I cannot trade CFDs on a Wanda because I'm a U.S. resident. I'm blocked from it. I have to trade futures, which is why I trade on TD Ameritrade futures. Yeah, you got it. You got it. Uh, Yeah, I know there's a delay on YouTube, so I'll wait. I'll wait for your answer. But I mean, again, what's happening to MFF isn't a protection issue for its clients, right? It's regulators trying to offer protection to its clients because what they're doing is shady and highly illegal. Less likely to get hit with the same MFF situation. Yeah, but you don't know, right? I mean, until those firms comply with the regulation, you won't know, right? I mean, right now there is no regulation, so I guess they can't manipulate price the same way. Well, you don't know that. I mean, I guess I don't know that because I've heard of like Apex and I've heard of Top Step, but are they giving you a real funded account? I think Apex does, but even that, it's not worth it. I mean, you look at what you're getting for what you're paying. It's not worth it. You know, you're better off. You're better off securing a loan. You know, and trading with the loan. Well, not a loan these days because interest rates are ridiculous. But 3 years ago, you were better off getting a loan at something like 1.9%, 2.2%, and as soon as you could pay back the loan, pay it back, and going off of that. So, do I trade? I don't trade T bills or T bonds. I purchase. Yeah, I purchase bonds. I purchase bonds all year. So yeah, no, I don't trade them though. No. Oh, well. All right, guys, listen, I've got to run. My daughter plays in 10 minutes. So hopefully I was able to answer everybody's question. And yeah, absolutely. I'll catch everybody later. If you guys have any questions, hit me up. I'll see you guys.